News for you. We're calling it America's Greece, and for very good reasons. The fact is, Puerto Rico, yes, they have just run out of other people's money, and in a big way. $72 billion in debt. Listen, this debt, by the way, is in the hands of ordinary folks. It's not like that convoluted Greece debt. And the root of this thing, not unlike Greece, listen, we're talking about an economy, self-sufficient economy, is slipped into a welfare state. Crime, poverty, soaring, and lenders still forked over a whole lot of money. And without any sort of emergency intervention, Puerto Rico will default, and that could trigger municipal bond scares like we had before in the financial crisis. So it's maybe a greater threat right now than anything going on in Europe. Now, just moments ago, in a speech in Puerto Rico, Governor Garcia Padilla said that the Commonwealth needs and will propose a restructuring plan. But here's what he started out with. First thing this morning, when he admitted they didn't have one, he says that creditors must share sacrifice. Keep in mind, Puerto Rico is a Commonwealth that cannot file for bankruptcy. So, Heather, what happens now?
Well, if Congress allows, they could file for bankruptcy. It doesn't sound like Congress wants to do that. The other thing that could happen is like the 1990s when D.C. was in a similar situation. They set up a financial board to sort of run finances and figure out how everything was going to happen. That's something that's been proposed by one of the representatives from South Carolina early this month. It's also a possibility.
What happens with that debt, though? I mean, do they get some of that money, partial? They won't get all that. No one.
It'd be pennies on a dollar, right?
Yeah.
It'd be pennies on a dollar.
Would it be a de facto bankruptcy in a different name?
Well, it's the way that it depends on how Congress wants to structure it. There's different ways that they could structure it. But yeah, I mean, it would be the same thing as Chapter 9.
Well, yeah, that bill that's in the House now, H.R. 870, that came introduced in February, it's still in the Judiciary Committee, right, is Chapter 9, to allow them to do Chapter 9, both the public corporations and the municipalities in Puerto Rico. Basically, if that goes through, that's on the taxpayers, though, to me. That's a federal bailout. We're bailing out a Commonwealth. Right. That would never go through.
By the way, we should know that their debt per capita is higher than any state in the United States. Any state in the United States. How they got $72 billion in debt is beyond me.
Okay, the problem that we should know as Americans is that most of that debt is held by big American funds. In those funds, that money comes from pension funds, right, public pension funds, from endowments. So we, all of us in this country, are going to take the loss when that debt is cut down to 25 cents on the dollar, because there's been a lot of big bets by big, huge fund managers who thought that they knew Puerto Rico better. Matter of fact, one said, Puerto Rico, well, that's going to be the next Singapore. And it's nothing like that.
But see, this is the issue when you're looking even at Greece or at Puerto Rico. It's like, oh, they can't handle their money. One of the arguments is that the IMF and the EU should never have been giving Greece as much money as they did. And the argument here is exactly what you're mentioning. This has clearly been a welfare state. Unemployment is double what it is here. $2 billion in 2012 alone. 30% of the population is on food stamps. And we continue to pour the money in when it seems like it's an obvious bottom that is going to fall out. And it sounds familiar, doesn't it, when it comes to the...
It sounds like the Greece thing. Here's the thing. Speaking of history, in 1950, Puerto Rico produced 55% of their own food. Then we introduced transfer payments. What are transfer payments? Food stamps, welfare. That's right. 70% of the population on housing allowances. Now, $17 billion a year. They cannot produce their own food, and they can never be Singapore because they have fallen into the same trap that Greece fell into, and they got to spend other people's money.
They have no ability internally to restructure the economy to get out of this. And what happened was you had a lot of these, because all their bonds were tax exempt, you had a lot of tax exempt bond funds in this country buy it, and then it started to go bad, and then a lot of the hedge funds came in and bought the distressed debt. The one thing you do know is the creditors are going to get hurt badly here.
All right, guys, let's leave it right there.